Hey, how's it going, YouTube? Dennis here with another dividend investing video for you. Now, we're going to go into my portfolio here in just a moment so we can take a look at some of the changes that I made over the last week and how it's grown and everything else that's happened with it. Now, this episode is brought to you by Earnest, which is the student loan refinance company. They help you lower down your interest rates to help save you more money. So if you need to refinance your student loans entirely for free, check out my link in the show notes down below. Helps out support out the channel, but also gives you a nice little bonus. So what we're going to be doing here today is looking at our portfolio. I made one pretty big change. I sold a stock from my portfolio and I kind of just jumped it into everything else that I have. All right, so let's go ahead and take a look and see how my portfolio is doing. So currently right over here, I'm loading up on M1 Finance, which is the investing portfolio that I personally use. You can see right over here, my current value is at $14,543. Right now in my all-time money weighted return, I've earned over $1,585, which is pretty nice. If we go for the last day, today has not been a good day, so I'm down almost $286. And then for the week, down about $42. And then for the month, we're up $493. Quarter, $792. And then for the year, I'm up $115, and for the year, I'm up at $1,537. And for those that might be wondering, as far as unrealized gains, I am up $1,020. All right, so let's go ahead and take a look here. So what I actually ended up doing in my portfolio here is I actually ended up getting rid of a stock. So I finally sold a stock. It's been a long time since I sold a stock in this portfolio. But you could see here, I ended up getting rid of KHC, which is Kraft Heinz. They were currently in my portfolio for $230.97. Average share price of $31.43, which was a quantity of 7.349 shares, I should say. I actually sold this for a little bit of a profit, nothing too crazy across the board there, but I did sell that for a profit. So I ended up selling it, and then I bought into 15 different stocks plus a $100 deposit for that day. So a total of $330 is what went into this portfolio. All right, so over here you're going to see those 15 different buys. So we did some manual, and then others I just kind of let the M1 Finance system do its thing. So you can see here with Google, I added in $14.80. Next Era Energy, I have 18.26. Tesla, I put in about $5. VOOG, which is my only ETF, I put in about 23.85. Ally, about 10. Johnson & Johnson, $10. DLR, I put about 27. Home Depot, about 28. Facebook, about 61. Microsoft at about $10. Amazon, about 56. Let's see, Lockheed Martin, about $10.33. Ross, 10.80. We did Apple at almost $15, and then Costco here at about $28.67. So most of these were just kind of letting M1 do its thing. Some of the ones that I chose to do, I just wanted to make sure a little bit went into them. As you could see, Amazon and Facebook got the biggest majority. They're in my growth pie over here. So if we go into this, so with Amazon right here, obviously their share prices are ridiculously crazy high right there. So that $56 got me 0.017 shares. So that's like 1 and almost a 0.5%, a little 1.7% of a share, which is crazy. That's how little $56 seems to do. But nonetheless, it still goes into the portfolio and it still has an impact down the road. As you can see, this is my growth slice over here in my all tab with Amazon. Even though I only have such little amount in there in comparison to one share price, I'm still up about $23.72. So you can see it right there. And then Facebook was the other one that got a good chunk of it. I'm currently up $40 on this stock right over here, which is why I love fractional shares and why M1 Finance to me is one of my favorites. So you can see here with Facebook, I have 1.50 shares, so 1.5 shares. Average share price is $250. So I was able to buy in, obviously, in small increments, and that has so far netted me over $40 if I sold today, which was pretty cool. How are they doing for the day? Yeah, they're down pretty significantly for the day, but good for the week. So if we go back here, we saw in here as well too some good options here as far as some value, like we had Home Depot and Costco. That's in my retail pie. So if we go down here, so for retail is about 10% of my portfolio. Down here, we can see we have Home Depot and Costco both in the sector here. And out of all the stocks I have on here, these two are actually the highest performing. Starbucks is close behind, and then Ross right now has been taking quite a bit of a hit over the last few weeks, so it's not doing as well, but I'm still in the positive for it. I'm still planning on keeping Ross for a while, even though, one, they stopped giving out dividends, which is always an unfortunate thing. But two, I still see some good opportunity long term, just so that way we can get a lot of this value, a lot of this growth, I should say, over the next year or two, when hopefully things kind of get a little bit more back to normal when it comes to retail stores, and hopefully things get better for the company. They did recently, actually, do they have it in here? They recently went through the process. Let me actually go on to seekingalpha.com here. So let me switch over to seekingalpha.com. Right over here, I'm going to go into my portfolio and click on Ross. So they recently restructured their debt, which was really good. So yeah, right over here, you're going to be able to see that they effectively paid off their really high interest rates in order to save a lot more money, because they're getting really, really low rates. Right over here, that one of their new rates is 0.875, and then the other one is 1.875. And right over here, you can see they had some as high as 5.450%. So just going through and essentially refinancing their debt is going to save them a lot of money. So I feel like that's going to ease up some stuff when it comes to the long term and getting rid of some of that debt. So I plan on still holding them. Actually, let me go back here. If I go back to Ross, right over here. So for now, they're kind of like mid-range on their 52-week high. I don't know why my thing is like way off here. They're 52-week high, and right now they are sitting at 91.64 a share. You can see since the whole downturn back in March, they have kind of stayed somewhat flat for the most part. They've kind of been going up and down, kind of teetering at 100 and then coming back down. They did have the high of $124.16 at one point, but right now their PE ratio is way off, obviously, because of everything going on. They're at 119.16, so they're definitely a little bit too high there for most people. It shows here they have a dividend, but they didn't pay out anymore. They actually suspended the dividend more recently, but like I said, even though they suspended their dividend, I'm still planning on holding on to them. One, if they can come back with a dividend, but more so than anything, it's obviously the growth in their stock is what I'm kind of looking for. Because if we look at their 5 years, you can see there was like a little bit of a downturn there too back in 2018, and then the last 10 years things were looking pretty good there too. So my hope is to keep on staying with Ross, but we'll see how it goes. Things can change long term as well. But if we go back here to the main portfolio, right now, all of the slices here are looking pretty solid. My ETF is actually still technically down from when I transitioned from VOO to VOOG. Just switched over to a little bit more of an aggressive ETF. Right now, stock price is at 210 and my average price is 216. So if I bought now, I would be dollar cost averaging, which is always a good thing. If you are planning on holding something long term, because that means you're, of course, lowering the average that you pay for each individual stock, or fractions like I am, because I have 6.72 shares. So I should probably get more into this. Right now I'm doing something with the M1 borrowed, so it's kind of transitioning money from my borrow account to my actual investing account, and then from my investing account over to my regular account, which is making me not be able to invest today. So lesson learned, don't do M1 borrowed on a day you want to be actually doing some deposits into your account. But you can see as of this recording with the performance right now, I'm down across the board in every single slice. I don't know if I had any stocks besides Apple for the most part be in the positive. I think there was like one or two more. Yeah, like Amazon was barely in the positive, but most of these other stocks are down. I personally like to buy in the red. I'm okay with that. I know some people are not comfortable with it. They get a little afraid just because of, feeling like they're losing their money. And it could feel like that, and the market can continue to go down. But for me, the way I kind of see it is that I'm going to keep on buying even when the market is in the red, just because I want to dollar cost average. So keep buying in and then get prices or get stocks at a really good price, because I plan on holding most of these stocks for long term. Now, like I said, even with like the Roth thing, I can change my mind and I can end up selling it. But if I buy now and then, hopefully it goes back up and I decide to sell, great. If I buy now and it goes down a little bit more and I decide to sell, that's fine too, because I can also use those losses towards my taxes as well, if I absolutely have to. Ideally, I don't want to sell if I still feel like the company is going to have some opportunities down the road to essentially continue to make more money, whether it's through the dividends or through the actual growth in the stock value itself. But either way, it is just all a waiting game for me, because my whole focus is, getting to a point where this, performance on the portfolio is, increasing every single year. Obviously, a big focus is dividends, because, this portfolio is called Dividend Dennis. And one of my biggest goals, of course, is to get to over $1,000 every single month. And that's going to take some time. It's not going to be quick and, easy. It is going to take, effort and, being consistent, which is, very helpful when making YouTube videos, because I am holding myself accountable to you guys to continue to provide you guys these, updates every single week and how the portfolio is doing, just showing you the ups and downs of the stocks. But if you are seeing me buying in the red, just making sure that that, that's my risk tolerance. And if you're not comfortable with that, that doesn't mean you have to do it as well. Just, something to keep in the back of your head as well. But, end goal here is to get to over $1,000 a month in passive income with dividends. And right now we are actually, let me see what we're averaging. Give me one sec. So let me actually load up my dividend spreadsheet over here, and we'll get back onto the screen here so you guys can see this in real time. So I'm going to load this up right over here. Right now we can see where we're at. For the month of October, I'm estimating that we're going to have about $12.05. Not 100% sure yet, just waiting on the final numbers to come in. But last month in September, we made over $30. Now, $30 is nowhere near 1,000, but it is definitely a really good spot to be in, especially when a year ago we made 42 cents. And then even if you look back, the last month of the last quarter, it was $14.53. So we're seeing some really healthy increases in the amount of dividends we're making, which means that we are able to consistently, grow our numbers, which is going to help us get more down the road. Because if I take this money, which I am doing right now, all of this money right here, that was an ugly dollar sign, all this money right here, and then have it reinvested in the portfolio, that's just going to help it go even higher. So you can see, it's hard to kind of gauge an average, because the first quarter of 2020, I did 963. The second quarter, it was 2388. The third quarter was 63.21, and thus far in the fourth is $12.05. So it's hard to gauge the average, but it's just looking really good as far as how much we're bringing in every month with these dividends. Just making sure that we have this money coming in and then getting reinvested, as well as the actual growth on stocks too. Because as much as I love dividends and I care about them and they get me really excited to keep on investing, I also want to look for opportunity with growth too, which is why we have like Facebook, Amazon, Google, and even Tesla, which are companies that don't pay out dividends, but they do have opportunity for growth. Whether I want to, take those profits and reinvest them into dividend companies, we'll see how that goes down the road, and you guys can follow along. So make sure you hit that subscribe button down below, because you guys will be able to follow along on my decisions on whether I want to, sell those companies for profit, or if I want to keep them for even more growth down the road if I see opportunities in them, or however it goes. Now, one thing I really want you to do is continue to watch more on my investing journey. So check out my video right over here to keep on watching. My name is Dennis, and I will see you guys in that next video.